It is now my pleasure to bring in our panel of experts who will be with us for the entire hour. Steve East is the Managing Director of Height Analytics, and Saruhan Hatipoglu, CEO at Beri Consulting. Thank you very much, both of you gentlemen. There's so many questions here. Let me start with the central banks, because I don't recall a time when the world and sort of all of the investors around the world would dissect every word that the Fed is saying, or for that matter, even the BOJ, the PBOC. I mean, it's not just the Fed now. It's all the central banks that we're working very closely with. Saruhan?
Yes, and I think what happened last week is kind of a concern for investors as well, because Mr. Bernanke came out and pretty much said we're going to taper off quantitative easing, which caused some kind of a reaction by the ECB when the bond yields increased. So they went to a forward guidance policy. But a couple of days ago, Mr. Bernanke said, look, the numbers are not there yet. We're going to keep accommodative monetary policy. We're watching right now. But if you ask me, the quantitative easing is going to continue. They're trying to hit the 6.5% unemployment, and they're pushing the inflation to 2%.
Steve, is it odd that, you know, a time when a lot of investors want the ECB to sort of cut rates and spur the European economy, but at the same time, on the U.S. side, we're starting to worry that they might raise rates, and so every central bank is really not on the same page globally.
Yeah, that's right. I mean, first time in a while we've actually had some divergence in the major central banks, and to disagree a little bit with my esteemed colleague here, I think that the Fed is going to start tapering quantitative easing, which the Fed will try, as Bernanke did this week, tell us over and over again, it's not really tightening, we're still being accommodative, but the markets don't see it that way. So the markets see any cutback in quantitative easing and bond buying by the Fed as actually tightening policy, while meantime in Japan and in Europe, the central banks are loosening. And you saw the effect on the dollar till just recently.
Well, I was going to point that out. When Bernanke spoke and he hinted at this tapering situation, global markets, especially developing markets, they really were very concerned. I mean, we saw a pretty strong beating in the equity markets. And then that gets us back to our point here is, well, what do the global markets? Why should they care, or why are they so concerned whether or not Ben Bernanke decides to print more money?
You want me to take that first?
Go ahead.
So I think one of the reasons that global markets are so concerned with monetary policy, no matter which major central bank it is because monetary policy is really the only game in town, the only thing that presumably moves the needle. Most other, the other policy tool is fiscal policy. U.S. has too much debt, Japan has too much debt, Europe certainly has too much debt, so that leaves you one thing to try to move the economic needle, and that's monetary policy. So when monetary policy is the only tool that's going on really globally to really move the needle, well, people pay attention to it.
We're going to talk about China a lot more later, but I'm just curious, Saruhan, I mean, in your experience, do you think the Chinese central bank, the Japanese central bank, the Federal Reserve, and all these different central banks, are they all still talking to each other like they were a couple of years ago when the crisis was at its worst?
I don't think they're doing anything coordinated at this point. And last week, again, I'm going to go to last week as an example, because what happened there was a clear sign that Fed and the ECB was not talking. But let's talk about why, Steve's point about quantitative easing, it is really the only game in town, because fiscal policy, well, let's talk about why quantitative easing started, right? When do you do quantitative easing usually? When the long-term interest rates are stuck at a certain level, high level, so you want to bring it down. But when the QE started, long-term interest rates were close to zero. So the only reason that it started and stayed this long, in my opinion, is because Bernanke was not too hopeful about fiscal policy. All the disagreements between Democrats and Republicans, we're still operating in a sequestration time. And look at Europe, it's the same thing going on. Their fiscal policy is stuck in the austerity level. Slowly they are changing, but the only game in town is exactly monetary policy, and they're relying on that.
It's complicated, it's fascinating, and it continues to move markets. Saruhan and Steve, thank you very much. Of course, we're going to keep you here. We've got a lot more to come on this discussion, but you've helped us get started.